Hello, good weekend to all. This is a review of the US markets now, going into Monday's trading session, the 8th of February 2021. As always, please be sure to follow me on Twitter where I'm more active. Okay, in terms of US markets, then let's try and sum this up. Okay, so in terms of the market as we commenced last week, the concern obviously, or the trading frenzy, was regarding GameStop. Okay, and other social media favorites. Okay, given the run up in those short squeeze. Okay, a lot of the hedge funds obviously were hurting and lost a significant amount of their capital, and the increased volatility obviously raised concerns regarding valuations, and also raised concerns in terms of potential market manipulation, etc., which again raised fears with regards to increased regulation and obviously positioning sizes as well that were on the markets, and therefore indicated a potential market reversal or market top, which again negated the argument for vaccination hopium, also negated the stimulus measures as well. There was a lot of doubt regarding the 1.9 trillion, and that certainly has been negated to a large extent. Okay, given the wild swings in the markets, which obviously caused a increased liquidity and obviously volatility in the markets, and that generally does indicate a potential top. As you can see in the daily chart for the S&P 500, the previous week we had quite a significant sell-off down to this key support here, which coincides with the gap level or gap fill. Okay, an impressive thrust since then. So again, respect, and I for one certainly did expect, and this is one of the reasons why I remained bearish for the majority of the week. I was expecting a potential right shoulder here, okay, and then looking for a potential sell-off. I was expecting the right shoulder to potentially hold the fib 75 to 61% max upside. Obviously was seen at gap fill at 3850 on the S&P 500, but obviously we've negated that now. Very impressive. I mean, the volume has been pretty steady, not increasing, so again, slight cause for concern. But as we know, the markets can certainly tumble with just one fundamental catalyst very quickly. So again, always remain nimble, be alert, and obviously the focus remains in terms of stimulus going forward. But for now, in terms of the daily chart on the S&P 500, the focus is obviously on stimulus. That's basically the hopium trade right now. Vaccinations, Mr. Biden certainly taking the helm. Okay, more concerted effort, more organized effort in terms of obviously containing this virus and pandemic in the US, and that certainly seems to be the focus of traders and investors, and that certainly is the bias in the market. So again, you have to respect that once the market shifts and changes. I mean, like I said, I for one certainly was expecting a reversal. I was expecting that right shoulder to potentially hold. I was expecting the fib retracement ratios to certainly hold, but the market has defied all expectations, especially with GameStop, especially with increased regulation fears as well. A lot of volatility indicating certain individuals were exposed in terms of the market manipulation higher, and therefore obviously the whole thing starts to unravel. That certainly didn't occur. Even with this increased volume, as you can see here in terms of the sell side, just no follow through at all, and the bears certainly lost control and the bulls certainly took over. Okay, so that's basically where we are. So the vaccine hopium, and obviously the hopium regarding stimulus certainly remains the key driving factor there in terms of the markets. Obviously Yellen as well taking the helm in terms of Treasury Secretary. So again, indications similar to Mario. Obviously nomination there in terms of easy monetary policy, and obviously fiscal taps certainly are open in terms of stimulus, and therefore the market's expecting a move higher. That was obviously seen in commodities. Having said that as well, commodities got a boost given the fact that obviously there was talk with regards to a lot of short positions being exposed, and therefore the same situation what happened in terms of GameStop occurring in the commodities markets, which certainly helped the S&P to a large extent, and also helped the price of oil as well. As you can see, light crude, very, very impressive thrust here. Okay, daily chart. Oil, very similar to the pattern on Brent, which I was discussing in terms of European obviously indices before. Very, very impressive thrust here. We are now coming into previous support equals resistance around the $60 level, and then previous support equals resistance around the $58 level, and we're currently at the 57. Again, it's the vaccinations. Again, it's a vaccination rally to a large extent. They're expecting the aviation sector to open and potential normality to resume. Demand for goods and services, etc., led by stimulus and so on and so forth. I'm not going to go down that argument. I think we're all pretty well versed regarding that. Those that aren't, I would highly recommend reading the Dummy's Guide to Economics or the Dummy's Guide to Trading, but ideally Economics is the good book to read. Okay, so now that I've given you the fundamental catalyst and the drivers in the market at the moment, again, like I said, vaccine, hopium, stimulus, hopium, etc. Let's try and review this market. So usually I look at the actual Dow Industrials, and they will indicate to you in terms of the Dow theory. Okay, again, I'm not going to elaborate on that for you. For those that are obviously wanting to learn that, please do study the Dummy's Guide to Economics, a very good book, okay, or just a general book on economics will certainly give you an insight. It is something that obviously I learned when I did my economics degree at university. Okay, so in terms of the Dow transportation average, from my perspective, it still remains bearish, provided we remain below that fib 75%, hence the reason why my bias short remains. Okay, this is my theory, this is my thesis based on intermarket analysis. Until we take out fib 75%, we remain bearish. That's my full stop. Okay. In order for the markets to really start to obviously show immense strength, show a lead, the Dow theory indicates that the Dow Industrials should be leading because obviously of stimulus indicates more growth. More growth indicates goods and services moving around, and therefore obviously Dow theory states that the Dow transports will lead in that sphere, and that certainly isn't the case at present. Okay. If this stimulus is supposed to be very, very stimulatory and bullish in nature, then the Dow, obviously, transportation index should certainly be leading, and that isn't the case. So again, that's one of my bearish arguments. In terms of the Dow Industrial, or Dow 30, should I say, this never really is a true reflection of the market, so always bear that in mind. It's just the top 30 stocks. This is why I always go to the Dow, obviously Dow transportation sector, okay. But nevertheless, again, we can still use it as a potential indicator, given the fact that the S&P's broke out, but the Dow 30 hasn't. Again, warning sign. Okay, you had a potential topping tail as well going into the at the end of the day as well. So just bear that in mind. We do have an unfilled gap below. So again, these are just all arguments that I'm piling up here, and we'll certainly try to sum them up and give you an insight with regards to that. So again, that key support has held. Double top potential scenario. The Dow transports at the fib 70 or below the fib 75% certainly isn't a bullish case. Okay, now let's move on to the Russell 2000. So again, Russell, more of an insight, given the fact that we've got 2,000 stocks here, broader range in terms of understanding the US equities. Very impressive. Okay, very impressive. That stimulus rally certainly is leading the pack, or leading this index higher. Very, very impressive, although there's no increased volume here, which again is cause for concern. There's certainly increased volume on the sell side, which again is a cause for concern, but no increased volume on the buy side. And we all know what excuse me, we all know obviously what the game that's being played at present. Obviously the Fed clearly pushing things higher, inflating asset bubbles, and then arguing that they've got no idea what caused it. Absolute morons. Okay, I'm not going to go into that obviously political side of things, but it certainly is. It's funny how the so-called previous monetary policy individuals that are leading that are now coming into government. And then the argument that obviously the government is independent in terms of monetary policy, I call BS. Okay, there's certainly a coordinated effort here of blatant manipulation in terms of asset prices, and that certainly is the weaponizing it, the monetizing this as well. It certainly doesn't bode well for the markets going forward, because once this bubble bursts, it certainly is built on sand, and we are going to see a major meltdown, given the fact that we've obviously gone down the path of obviously reduced rates, we've gone down the path of QE, we've gone down the path of fiscal stimulus now. When this pandemic, the powder's dry. Okay, there's no more bullets left to fire. Okay, so certainly very worrying times, to say the least. Okay, so again, inflation is going to be kicking in, interest rates have to rise. This whole game of musical chairs is going to stop, and it's going to stop very abruptly, and God help us. That's all I can state, okay, from an economist perspective. But again, economist and trader, you have to keep both caps on, okay, and you have to realise the short-term, obviously, irrational exuberance in the market as well, to a large extent. Okay, so again, the Russell 2000, very impressive, pushing higher, respect, okay. Respect needs to be given where it's due, and you can certainly see that move obviously quite evident there. So again, you have to respect that in terms of the market itself. Let's just quickly look at the actual individual sectors here as well. So looking at the financial sector, SPDR, you can look at this. Okay, so again, not exactly bullish. Okay, this thrust higher isn't giving you a bullish perspective. Again, we're still below gap fill, and we're still below the double top. So again, cause for concern in terms of financials. So it's not exactly a rosy picture in terms of obviously S&P discretionary. Obviously, one would expect that to push higher, given the fact that you are giving everybody $1,400 to spend. Again, that is just from my perspective, it's a very, very insane idea. But again, helicopter money is in full swing, and God knows where this is going to stop. It's all inflationary, and it doesn't actually solve any problems. It just kicks the can down the road, and how many cans are we going to kick? That's the question. But that's what they insist on. That's what they're doing. We're not getting into the politics of things. I think we already know my view. But how long can you sustain this? It really is comical now, unfortunately. But nevertheless, this is where we are. We had a bearish engulfing candle last week. Again, like I said, given the GameStop frenzy, given the increased volatility, surge, etc., I thought that was it. I thought we were certainly getting a potential market top here with this bearish engulfing candle. The bullish news certainly has been baked in terms of stimulus. As you can see here, quite an impressive thrust higher in the index. But lo and behold, the markets continue their musical game of chairs, or should I say game of musical chairs. Okay, energy sector, again, not exactly bullish, folks. Okay, not pushing higher, not making new highs. If anything, it's at that right shoulder, potential H&S. Okay, so it looks like the only real, obviously, index that pushed the market, well, the only, obviously, variables that are pushing this market higher at the moment, even look at the healthcare sector. Healthcare, again, languishing. Even though we've got the vaccinations, etc., obviously, certainly isn't bullish, okay, in terms of this market sector all in all. Industrials, again, look, okay, not exactly pushing to new highs, certainly cause for concern, okay. The only thing that obviously is tech, and we all know that the S&P obviously has a higher, as this continues to go higher, has a higher weighting towards tech. So the only thing that actually pushed the markets higher last week was tech, and that's a very distorted picture of strength. That isn't strength. That isn't in an innate organic strength. It's very distorted strength, okay. So that certainly indicates the picture to you. So those that are bearish, or those that are obviously bearish in the market, would be better off obviously shorting the other sector indices as opposed to the actual overall index itself. But again, very impressive. S&P pushing higher on the back of tech, okay. And again, looking at Bitcoin, Bitcoin really, from my perspective, is a leading variable. When Bitcoin pushes higher, the Nasdaq pushes higher, the S&P 500 pushes higher. So keep an eye on Bitcoin. If we do see a potential double top on Bitcoin, then you are going to see a flush on the actual S&P as well. So watch out for that. Okay, in terms of the Biotechs, again, very impressive. Biotechs pushing higher, but again, one would expect that given the vaccinations, given the pandemic. Obviously, though, that area certainly is going to be very, very hot going forward. Okay, in terms of the semicons certainly not pushing higher. Okay, cause for concern. So from my perspective, the strength in the S&P is fake news. It's probably the best way of understanding it. Okay, given the fact that the Dow transports are weak, the Dow 30 double top potential scenario, okay, and the Nasdaq Biotechs, which we've already discussed. Also, another variable as well to take into consideration is the VIX. The VIX now into support as well, okay. So unless the VIX obviously breaks lower and the S&P continues its push higher, then that's another question to take into consideration. So we've got oil obviously potentially coming into resistance in terms of crude, okay. We've got the other sector indices showing weakness, okay. Dow transports showing weakness, and therefore obviously Dow, the Russell 2000, certainly impressive. Again, respect, needs to be given where it's due. But let me just bring up another chart for you as well whilst I'm at this. IWV, is it? Russell 3000, that's the one. Okay, so just bring this chart here as well. Let's give you an insight. Okay, so daily chart of Russell 3000. So again, a broader range of stocks to observe in terms of US indices pushed higher, but that isn't exactly a bullish picture, okay, in terms of the thrust higher. So from my perspective, market still remains vulnerable, okay. Given the Dow transports hasn't pushed new highs, given the fact that obviously the scenario is certainly one of a tech rally, one would exercise immense caution, okay. Nevertheless, you have to respect a breakout. Breakout obviously triggers further short squeezes, so one would certainly respect that. But from my perspective, don't be surprised to see gap fill down to 3770 and 3720, okay. I would not be surprised next week at all. Okay, I certainly wouldn't be surprised in terms of the S&P. But nevertheless, for now, in terms of the technical picture, one would argue that you are going to have previous resistance equal support. So the key support, from my perspective, if there were a flush lower, okay, is obviously first of all gap fill at 3870, previous resistance equal support at 3860. Then you've got a gap fill at 3830, horizontal support at 3816, previous resistance equal support around 3840, and then obviously your ultimate gap fill at 3775 and 3715 on the downside. The upside, sky's the limit, okay? And a lot of this potential short squeeze or move higher tends to happen overnight, and the Fed bots are certainly active. Don't call me a conspiracy theorist, but I think everybody knows exactly what's going on with regards to all this cheap money not having anywhere to park itself. And therefore, obviously, you've got the Feds, obviously, autonomous parking overnight, pushing equity futures higher. Okay, so a lot of the moves then tend to happen overnight, and that's because of the light volume manipulation that can occur. Nevertheless, that's basically where we are. This is one of the reasons why I've started to I've reduced my trading of the S&P quite drastically until obviously I see a clear key signal. But nevertheless, one would obviously argue just go short after 9 p.m. every day and just rely on the Fed to keep buying obviously S&P futures higher and higher and higher. Nevertheless, as traders, we're nimble. We have our stop losses in place if we're wrong. And let's see what the week ahead brings. I hope that insight in terms of US markets is helpful for those that are trading US indices. I'll certainly try and be more frequent as much as I can. My main focus really obviously is European indices. If I can make my 50 to 100 points in the morning, I'm done for the day, and then I call it quits and focus and help the kids given this lockdown homeschooling. Okay, nevertheless, take care and wish you the best. Goodbye.